Welcome back to Growing Your Savings Using Blue Chip Stocks. Today is February 14th. Happy Valentine's Day. Prices have been updated for the end of last week. We're going to check in with our listing of Canadian stocks on the TSX and our US stocks on the New York Stock Exchange and NASDAQ, as well as my 4 fantasy Toronto Stock Exchange portfolios to see how they're doing. Our $5,000 portfolio is up 2%, which is up from 0% last week. The $10,000 portfolio is up 3%, which is up from 2% last week. Our $25,000 portfolio is up 3%, which is up from 1% last week. And the $100,000 portfolio is up 2%, which is up from 1% last week. Each portfolio will also show you the dividend payout so you can see how the stock market pays you. Things to remember, as always, the prices in the stock market will go up and down with the economy and world events. One of the things that has affected the US market this week is the threat of Russia invading the Ukraine. With blue chip stocks, the dividends are fairly secure. They will pay out at the same rate no matter the value of the stock. Dividends can also be used to buy more stock. And dividing your money evenly into each of the 5 sectors shown will create a stable portfolio. When one commodity goes up, the others the others tend to go up. And when the market takes a tumble, and it will always take a tumble at some point, make sure this is when you buy. Either add cash or reinvest your dividends. So we're going to take a look at the Canadian portfolio. Manufacturing and industry, we've got a new thing to look at this week. I have highlighted the dividend in yellow, and each of the ones that are highlighted in yellow, the company has increased the dividend payout. So this will increase the payout that you get when you build your portfolio. So manufacturing and industry, we've got, it's about an even in between positive and negatives. So we're heading more towards green as the weeks go by. Consumer goods, we are more in the positive. We have Maple Leaf Foods up 12%. Finance seems to be in a pretty even break between negative and positive. Resources and commodities is all positive now. So everything is well up. We got some pretty good ones with 12% with Imperial Oil, 11% with Ovintiv. Good showing there. Utilities, we're looking really good here too. We're heading mostly towards the green with just a couple on the very small side of a loss. So overall, our Canadian portfolio is up 2% on the year. Our US portfolio, not doing quite as well because of the issues going on in the US, especially with the threat of Russia and Ukraine. So we've got some new dividends, and we've got 1, 2, 3, 4 in manufacturing. We have 1 in consumer goods and services. We have a couple in finance, and we have 1 in resources as well as 2 in utilities. So taking a look at the breakdown, we're a little bit more on the negative side in manufacturing and industry. A lot of it has to do with the supply chain issues that have been going on and the border blockades. We have only 4 that are on the positive side right now, mostly in the negative side overall. In consumer goods, we're a little bit more on the negative side than we are on the positive side, but we've got some interesting ones here like Gannett, which is up 15% on the year. And 15% when you're talking about a dollar stock is a pretty good return. We started at $5.30 and it's now gone up almost a dollar. Finance, almost an even split, although we do have some things to take note of. I made a little note over here. PayPal is now down 34%. However, as I mentioned last week, with the fact that it has gone down, this is still a really good time to buy. The analysts are expecting the price to be $187 or above by the end of the year. So if you were to buy in now, you're going to make some pretty good gains by the end of the year. In resources and commodities, we have a really good one to look at here. Alcoa is up 22% on the year. Resources and commodities in the US are also all trending higher. Utilities, we're all back in the red for utilities, but except for AT&T down 12% overall on the year, we're not doing too badly. So as an average, the US portfolio is down 3% on the year. That's not too bad. So let's take a look at our portfolios. Our $5,000 portfolio, we're up 2% on the year. We have a total value of $5,178.70 this week, which is a gain of $81 from last week and an overall gain of $268. In the $5,000 portfolio, we didn't have any of our companies raise their dividends, so the annual dividend income is still holding steady at $185.52. In the $10,000 portfolio, we're up 3% overall, which is looking pretty good. Our negative ones are actually not that negative at all. We've just 3%, 1%, and 3%. That's not too bad. Our total value is now $10,323, and we started when we bought it was $10,079. So we gained $48 overall this week for a total gain on the portfolio for the year of $488. Our dividend income has increased a little bit. It was up until January, it was $336.74 a year. This portfolio now pays out $355.30. So let's take a look at our $25,000 portfolio. We are up 3% overall. We originally invested $24,860 and we're now up to $25,471. So I recorded February 14th over here. We've got a weekly gain of $513 for an overall annual gain of $1,600. Pretty good if you needed some extra cash. The dividend income for the $25,000 portfolio is up. Up until January, this portfolio paid out $699.28, and we're now up to $702.22. Taking a look at the $100,000 portfolio, overall we have gains of 2%. Resources and commodities are looking really good. We've got some serious gains in here. Going up to the top to manufacturing, looks like we're a little bit more on the positive side, on the green side, which is good. Consumer goods and services, it's pretty good split. We got 6 greens and 4 pinks, so we're heading in the right direction there. Finance seems to be split pretty evenly, but we've just got 1%, 5% biggest losses here, but it's also offset by 5% and 4% gains here. Like I said, resources is all looking good. Utilities are looking good as well. We're all in the green except for 2 small losses right here. So we have a good gain. We started the year buying $96,036. We're up to $101.28. So we've got a gain this week of $832 and an overall gain of $4,992. So let's look forward to next week and hope that the market starts trending higher and we'll see how much we gain next week. So I look forward to meeting with you all again next week on Monday, February 21st.